Hello and welcome to In Retrospect. My name is Ricardo Evangelista and every Friday I'll be here to talk about the main events dominating the news agenda. We'll look into politics, into economics, and always keep an eye on how all this is affecting the financial markets. So, what has been happening this week? The coronavirus continues to dominate the news agenda. This week we reach almost 42 million cases worldwide, with the unfortunate result of over 1.1 million deaths. In Europe, in Western Europe, two countries, France and Spain, became the first to announce more than 1 million cases each. So this is a very serious sanitary and economic problem for the governments in the region to deal with. We've seen that Europe experienced drops in GDP in Q2 of, in some cases, almost 20%, which is incredible. There was a small recovery during the Q3, but this recovery is now being threatened by the second wave of the virus that seems to be well on its way. It will be a big dilemma for governments to face on whether to lock down or not to lock down. Populations are very tired of the restrictions that have been imposed. The economic crisis also is very taxing because many people lost their jobs or saw their income reduced substantially. So there's no appetite for further lockdown. However, if there's no lockdown, the virus is more likely to continue to claim lives and to continue to disrupt economic activity for a longer period of time. So a big decision here for governments in Europe. And this situation is likely to also expand to other regions in the Northern Hemisphere as winter kicks in. So coronavirus, unavoidable, remains at the top of the agenda and has been much talked about during this week that now ends. Moving on, we will look at what's happening on the other side of the Atlantic, in the United States. We all know the presidential election campaign is well on its way. The election is less than 2 weeks away, and last night we had the final debate between the two candidates, Joe Biden and Donald Trump. According to most analysts, there was no clear winner emerging from this debate, and this is seen as good news for Joe Biden because he leads the polls by an average of 8 points in relation to Trump. So Trump has a lot of way to make if he is to win this election. The markets used to see, until not too long ago, a victory by Joe Biden as somehow being negative because Joe Biden was likely to raise capital gains taxes, amongst other things, and regulate tech industries and things like that. But now the markets are taking a more benign view of such a scenario. And in fact, a clear victory by Joe Biden is seen as the best possible outcome for the election. The worst possible outcome, of course, would be a close win by one of the candidates with the loser contesting it. This would trigger all sorts of delays in action that is much needed at the moment in the country, which could then dent risk appetite and end up provoking a correction in the markets or even starting a downwards trend altogether. Jumping across the globe, we'll go to China. And China this week published GDP figures for Q3, and the result was amazing. So the economy grew 4.9% and showed the rest of the world what a V-shaped recovery looks like. An amazing feat by the Beijing authorities. This is, of course, easier for them than for most other countries because many of the technological requirements for an effective contact tracing policy were already in place due to surveillance and all sorts of things. But still, great news for China and good news for the markets as well because a growth of 5% almost in Q3 GDP in China is very good news, and the markets went up as a result. And we couldn't end the week without mentioning Brexit. So this week, both sides almost walked away from talks, which would have meant a relationship between the UK and the EU based on WTO terms. But Brexit being Brexit, everything changed back to where it was before. And both sides are now once again talking. And the prevailing sentiment is that in the end, there will be some form of deal in place, even if it is a basic one. This also seems to be confirmed by how the markets are behaving. and judging by the performance of the pound, normally a good indicator on these things, the pound remains at $1.30 or just above, which means that at the moment the markets are not pricing in a no-deal Brexit. And this is all for today. I will be back next week for more views on current affairs and the markets. In the meantime, visit activtrades.com or .eu, depending on where you are, for more market analysis. Thank you very much for watching.